TGIF, everybody. How's everyone doing? Everyone see NASDAQ up there? Guys? Okay. Good morning, Money, Kevin, everybody.
Morning, Coach.
Hey, how are you? How's it going today, Stel?
TGIF, very good. Thank you, man.
Yeah, I know. I feel that too. Okay, so I'm going to be real quick, like I told Blake, like I am sexually. My wife used to say, Dale, so fast. Anyway, here's the Dixie for what it means. I've had this blue speed line in here for a long time. And it doesn't mean that we're going to get any big reversal. I mean, the RSI setup isn't great, but I'd start to be real careful being short the dollar down here. So we'll see if it's Friday. But with the NFP, there could be a squeeze. I think people are looking for kind of a weak number. And something I noticed, NASDAQ starting to lose a little bit of its relative strength. We're not we are diverging on the daily, on the 4-hour. I think 3,700 is possible. I'm not sure if they put together a deal or not last night, if there was a fiscal stimulus deal. But anyway, I'm going to be waiting for the number. The weakest currency during this dollar bashing has been Aussie, especially the last few weeks. And, Aussie has shown it again today, down a few pips with everything else up on the day. So this will be my preferred short. I'm looking at gold approaching this maybe 1850 level to try something. And here's silver. Silver's acting better. I'm not sure. This looks like the big picture to me on silver. We shouldn't get through $25. If we do, then, it's not a descending triangle. It's just a triangle. But I'm still thinking we're going to take out this double bottom, take out this low that Stelius bought it on this week. What a great buy, because we never took out the stops here, unlike gold. Okay, gold took out the commensurate low by plenty, and I still think silver does. So potential selling a pop in silver and Aussie after the number. I'm going to bring Blake in because, as Blake says, the data, the market's going to be more sensitive to data as tape bombs' effectiveness on the market diminish.
100% believe that.
Okay.
Hey, give me one more minute, Dale.
Okay. All right. So also, when you look at the gold shares like Newmont, we've had a pretty good bounce in gold, but Newmont's just rallying back to a breakdown, and GDX, the same thing. I mean, there's nothing in the shares that make me say, hey, I have to own it. I still think there's one more wave to the downside in the miners. And with that being said, I think that the bullion as well will follow through. In fact, gold is looking like it's coming off a little bit here anyway. So I know Blake wants to get the bias chart completed so that he can be ready to take advantage and react to the reaction. I think they're looking for a weaker number, right, Stel? The whisper number?
Yes, slightly, yeah.
Like
Slightly,
what,
yeah.
500,000?
It was 469, 470, basically.
Okay, close enough for government work. So we'll see if they surprise in either direction. And I'm looking at VIX, and I still think there's a good shot. Grega showed something to the team last week. There might be a little bit more time left in it doing nothing, but I think every quarter you put on a little VIX for the surprise. And you don't lose as much money as if you would if you were short futures and wrong for, like, the Pfizer news did to me a few weeks ago. So, just something to take advantage of if there is a problem in the market. S&Ps on a weekly basis have done absolutely nothing wrong. Okay. But next week we could. Okay. Because next week the off number is very attainable, 3640. So maybe next week's the week. I know a lot of people are looking at their megaphone formation up around 3,700. I know people have 38, 3,900 targets, but a lot of things happening around the solstice. In fact, I love planets. Jupiter and Saturn are going to be they're moving towards each other, and it's going to look like a double planet in the sky. And the last time this has happened was in the Middle Ages, 1200s. Back then, I was a serf. This lifetime, I surfed, and we won't see anything like this. And Norm Winsky called me about it. It's in Aquarius. I don't know what that means, but something that happens, every
Oh,
800
wait,
years.
are we talking moon cycles again?
No, the Jupiter and Saturn are going to collide. Well, it'll look like that in the sky. We're going to be able to see it late December.
Wow, that
Yeah.
would cause a pretty big.
But visually, it'll look like they're touching, but it's still millions of miles apart. But it's the closest conjunction since the Middle Ages, when you were a knight on the round table with King Arthur.
Millions of miles apart, a bit like me and my ex-wife. Yeah.
Okay.
I'm starting to learn that one. Right now it's only about 90, but
Okay,
anyway.
So I guess the quick
Okay.
I guess the quick question is, what does that have to do with the euro? I'm joking.
Europa is a planet somewhere. Europa.
Yeah. Okay. So you know what? I'm gonna go ahead and take over. I've really got to get started today.
Right.
We do have economic data coming out shortly. This is non-farm payrolls, and
right.
As I just tweeted, and if you guys retweet that, retweet would be great. That'd be nice.
Where?
We don't ask for much around here. So if you see us on social media and you see us tweeting about like the FACE webinar and you like what we do, just retweet it, please. Okay. We all appreciate it. But as I was mentioning to you guys, or I said on that tweet, economic data is going to start to matter, and jobs reports are going to matter. Thank you, Patrick. By the way, it's going to start to matter moving forward because we don't have to worry about the late night tweets or early morning tweets, and you're going to start to see money come back into the currency market as a result. And so people are going to start looking at macro data and, making decisions based on, the trends that they see, whether it's interest rate decisions or interest rate movements or, economies, weakening or strengthening based on, labor participation and inflation data. It's all going to start to matter again, which is great for currency traders, great for us. Right.
Yeah.
I'm sorry, Dale, were you saying something?
No.
Okay. And I was just saying it's great for us. And this is, for all of us, is a great time to be, getting involved in the currency market. And if you guys have been struggling over the last year because it's been a tough environment, which it has been, I'll be the first one to admit it has been a tough year. It's probably been probably one of my tougher years in my 23-year career of trading. This has been one of my toughest years. And I trade for a firm too. And it's difficult, but I'm really looking forward to this next year. And if you can make it through these years, these really crappy years, which cyclically that happens in any market you're in, especially if you specialize in a market, you're going to have good volatility, and then you're going to have very, very poor volatility. And we just went through a period of the last, year or two of just really crappy volatility. But I think that's going to increase, and it's going to get better. Excuse me. It's going to improve from here. So a lot of key developments happened overnight, and I want to bring up something that I talked about yesterday, and then we're going to go into the charts. Well, I'm going to actually go into the charts here, but I'm going to talk about the Aussie, and I want to talk about what we discussed yesterday, and I want you guys to think about this. You'd have to go back to yesterday and think about this conversation if you can recall.
I remember it.
Okay, what was the conversation?
The conversation is everyone's thinking this is a breakout in Aussie, but they're too lazy to go left and really look at where we are historically, and that it may not be a breakout. This could be a fib level where the market could run into trouble.
Damn it, Dale, that was awesome. You were really, really good, and your memory is like a sponge for a dinosaur.
I'm an
You're
elephant.
amazing.
Not
Just
the dinosaurs were smart.
But that was exactly what we talked about yesterday. You know, most traders are looking at this. You know, they're like, oh, you know, hey, you know, oh, look, we're breaking out. We broke above 74, 15, and it's a breakout. And you know, time to get bullish. Look, the euro's breaking out, so the Aussie's going to follow suit. You know, we got to get long. And what they didn't look at is they didn't look at the post COVID move and realize that we're at the 127% extension, just above those highs. And it's like, I told you guys yesterday, you got to be careful as we approach that 74.50, you know, look, okay. If you weren't here yesterday, here's the bias chart from yesterday. I said, we're bullish, but you got to be careful, 74.50. I said, I have a feeling that's going to stick. And what happened? You know, we hit it. No, and you know what's funny, not to you guys, but to everybody else. Well, no, it's funny to us, not to everybody else. That's what I want to say. Is you guys all saw it yesterday. You're like, oh yeah. I mean, we knew that was going to run into 74.50, and we knew it was going to reject up there. But everybody else that's gotten long, they're like, what the hell just happened? But you know where their stops are at? Where do you think, Dale?
Right under the breakout.
Or they're not going to put it right under the breakout. They're going to put it right below
Swing
74
low.
cents. Yeah, they're going to they're going to give it a little bit of jiggle, and below 74 cents, they're going to say, you know what, if it gets below 74 cents, I just don't want it anymore.
Yeah.
And so you got to put yourself in the shoes of other traders and think about the way that they're thinking. And so right now, if we break below 74 cents, it's going to turn bearish near term. And I told you, I put the bullish designation up there yesterday reluctantly. If you recall our conversation, I said, I don't really want to, but because I thought 74.50 would hold, but I'm going to put it back into range today because I think traders on the long side are caught long. And right now, all they're hoping for is non-farm payroll is going to bail them out. That's exactly what they're thinking right now. If you're long the Aussie dollar at, let's say, 74.30 or 74.40 or 74.45 or 74.49, right? Because you bought the top here yesterday. The only thing you're thinking right now is, oh crap, man, I hope this non-farm payroll just rocks this Aussie higher, because if not, I'm going to have to get out. That's the only thing they're thinking. All right. Let's go. I'm going to quickly go through this stuff because I have to get over to my office for the non-farm payroll. So I got to jump off of this Zoom over on another Zoom. So anyway, I'm going to do this real quickly for you. All right. So the euro dollar, we matched highs. The support right here is 21.35. That we had this drawn from yesterday. I said, you know, this intraday support should hold. And I think that's going to be pretty important today. So it's, I still believe that the euro dollar is bullish and it's going to be bullish. So I do think that, you know, we can find resistance up here. We might make one more push to this is a 261% extension move of this last, you know, downdraft. The last major intraday move we had lower, that comes in at 122.07. I will write it down. I don't think we're going to reach it, frankly, but if we spike up there, I think that's probably the level you want to sell. Actually, I think intraday support right now is 121.33, and I think really the more key support for us over the next week, which I'm hoping that we get a chance to buy the euro, is down here at like 120.50, 120.80, somewhere around here. That's where I hope to buy the euro next week. Honestly, is right around these levels. Because you know what could happen is you get a Brexit deal and the cable screams past 135 and the euro screams past 122, and there's nothing you can do about that, right? I mean, that's something that could happen over the course of the next week and maybe even over the weekend. So that's why I will not be short the euro dollar. You guys know we talked about this yesterday. I don't want to, even though I feel that the euro may have been topped out, like I said yesterday, I wasn't going to short it. And today, I'll tell you again, I'm not going to short the euro. And if I do, it'll be for 15 minutes and then I'll be in and out. I don't like trading counter trend, right? Okay, so let's go over to the cable. We're right up against 135. That's going to be resistance. You guys remember from yesterday, right? 135, or I wrote 134.80, but I said right above that, it's 135. This is the descending wedge subscriber. Hold on really quick. 1 second. Hold on. Sorry. Okay, so 135, this is the descending wedge resistance, and it comes in at 130, 135, and 134.80 was the high from yesterday. I still think the cable's gonna, you get a deal, and we're probably gonna scream up to 140 pretty quick. Again, there's nothing you can really do about that. And as I told the guys and gals in the chat room yesterday, I'm like, look, the 135 level is really the level that's kind of the Brexit deal gets done, you go above 135. It doesn't get done, this is going to end up being the most major epic resistance you've seen all year, because we're probably going to slam right back down to the mid 20s. I mean, that's the risk right now, right? That's really the risk. That's really what's at risk right now. So support, as you guys probably remember, well, I'll write down a couple levels. 134, since we broke out there, but I kind of want to write 133, well, 132.80, just in case. You guys never know that some headline can come out and, Brexit deal's never going to get done, and, we get slammed down. It can happen. All right. 135, I still think is really key resistance. We can probe it, but it's going to be really key. Now look at the Kiwi. We've been monitoring this for it seems like decades, right? But it's really been like the last couple of weeks. We've had this ascending wedge drawn out. If you've been here every day, you've seen it, right? We're probing support. So, we start breaking through 70-30 here. It's gonna turn. Why am I paying such close attention to this? Because if you guys don't recall, I'm long Euro New Zealand. So I'm paying very, very close attention to this, because what I'd love to see is the euro stay above 121, and I'd love to see the Kiwi drop to about 69 cents or back to 68 cents. You know where that puts the Euro New Zealand that I bought 2 days ago? If you're a Forex Analytics subscriber, you are listening to daily roundup webinars. You already know I'm long, near like this 170.20 level. That puts the Euro New Zealand back at the mid 177s. So that's why I'm so laser focused on what's happening here with the Kiwi, because the Kiwi, if it breaks through, the support, we're gonna see a little bit of a move lower. What would coincide with that as well? The Aussie, right? If the Aussie moves back below 74 cents. So that's what I'm hoping. But what I hope and what happens are two totally different things. The Kiwi dollar is still bullish, and the Kiwi dollar is bullish while we're above 68 cents. So that doesn't mean we can't get a near-term pullback and put us into a range. And I think while we're above 70 cents, here we go. While we're above 70 cents, we are, oh, wow. Peso's just screaming high right now. We were just probing stops below 1980, and then now we're spiking higher. Okay. Anyway, let's get to it. Well, since we're looking at the peso, so the peso, one of the guys that I work with, he's an ex Lehman, ex Nomura Bank guy. He was showing me a chart on money flow and the dollar Mexican peso yesterday, and he's pretty convinced that the dollar Mexican peso is diverging away from money flow, which all the money flow is pointing lower, but the dollar Mexican peso price action is pulling higher. So he was saying, if that stops, if the money flow starts reversing, then we're going to see a reversal in the dollar Mexican peso. So what I'm thinking here is if we can get back above, we couldn't get back above 20 yesterday, but really we get back above 20.05 roughly, things going to turn bullish. So and I know it's been trading very heavy, but it's something worth noting. I think it's bearish now. I do still think it's bearish at the moment, but we start getting above like 20.05, 2010, it's going to take all that downside pressure off. Support right now in the peso is going to be 1963, 161% extension, If you guys are new here, we do this every morning. I do it a little slower usually during the week because I don't have to attend the NFP, but today. All right, so we got thanks to Benedict in our chat room. He's like, hey, isn't that a excuse me really quick. Isn't that a bullish butterfly in the dollar Canadian? And I was looking at just the confluence of the dollar Canadian support at 128.60. 128.80, but that could be a bullish butterfly. Now, remember, today we have not only the U.S. non-farm payrolls, but we have Canadian jobs report too. So, that could be a factor in what happens here. So just keep that in mind. Dollar Canadian further support. I mean, we could really stretch here. Could we make it below 128? Yeah, we got double whammy Canadian US jobs report today. I'm hoping we don't get all the way down there. But I'll write down for now 28.40. You get just below the lows, and then resistance is 129. 129 actually, it's 129.25, and we're bearish well below it. But this could very easily flip back to range if we break back above 129.25, which I'll put an asterisk there. Okay, so it's bearish for now. Dollar Swiss. So the Swissy, I know I've expressed this to you guys before. I don't like shorting the dollar Swiss. I don't like buying Swiss francs. Every time I buy Swiss francs, that means I short the dollar Swiss or Euro Swiss or whatever it is I'm doing. The Swiss National Bank shoves that trade so far up my rear end, I don't even know which day it is afterwards. So I tend not to buy Swiss francs. I'd rather short Swiss francs. That means I'd rather be on the long side of the dollar Swiss. There's no indication for me to be long at this moment, but I'm just saying I do not like buying Swiss francs. I just don't. It's not a trade that I prefer to do. So that doesn't mean it's not the right thing to do. It's just something I just choose not to do. So we're going to mark up these lows at 88.80. Oops, where's my bias chart? But while we're below 89.80, you have to stay bearish. And it just is what it is. And yes, the Swiss National Bank is keen to stick in that trade to me where the sun doesn't shine all the time. That's why I just don't do it. It's like every time I do it, I get stuck in some sort of intervention effort by by the Swiss National Bank. So support here. The dollar yen tried to break down. I as I've mentioned to you guys a lot over the last couple of days or the last couple of weeks, I really have no idea how to trade the dollar yen. I don't. And so I just leave it alone. If I don't know what I'm doing, I just leave it alone. So I think the dollar yen dropped because of general dollar weakness. But you know, obviously we're holding here support. So we just mark off 103.60, and then resistance is 104.75, and that's it. And as I've told you every day for the last 2 weeks with this one, you guys have fun with the dollar yen because I have no idea what to do with it. Okay. Dollar index. So 4-hour chart may have set up a little double bottom here. I wouldn't get too terribly excited about it, but I think, you know, pre non-farm payroll, you're getting traders that are, you know, taking some off the table, which, you know, makes sense. You know, as I mentioned yesterday to I don't know if it was to you guys or the daily roundup, I'm like, look, you know, if you're long or short the dollar and you made a lot of money pre non-farm payroll, you're probably pulling some of it off the table. You know, there's, you know, bound to be some profit taking. Oh crap, I'm almost got to go. 98.80. Okay, let me do this really fast. Shoot, dang it. Where am I? That time has gone by. Hey, Steve Stelios, I'm going to be passing over to you guys in just a second.
Yep.
Man,
Sure thing, mate.
I didn't realize it just got so the time just got away from me so quickly.
Just put 6 random numbers for the rest.
US dollar Norwegian krona is 8.76. I know the numbers by heart, so
I know you do.
96. Gold 1850. Whoops, that would be support. Actually, resistance is 1850. That's key. And I think yesterday is 1800, right? And S&P, we're still looking at 3600. And by the way, this is bullish, this is bearish, and
36.90 if you ask me
now. Okay, it just kind of creeps higher, but you know, while we're above that 3600, no reason to be bearish. Okay,
36.90 is the 127% extension of the triangles range.
Perfect. So guys, there you go. That's yours. It's all yours. Thank you guys for listening in today. I'm going to pass it over to Steven Stelios, and don't forget, there's a good interview coming in. Ben Maldonado, he's coming in. He's fun to listen to, and I'm going to pass it over to you guys. Thanks.
Have a good weekend, bro.
Yeah,
Thank
you guys.
you.
Blake,
TGIF,
good
have
luck.
a great weekend. See you guys.
You do, mate. Bye-bye.
Thank you. So, TGIF, it's been another long week. We got payrolls in about a minute and a half. But the main story headline wise again today's Brexit. We're going to talk about this after the numbers, but there seems to be a very the market kind of seems to be convinced now, or it seems to be very popular now. People are saying there's going to be a deal struck this weekend unless there's some kind of big obstacle, last minute obstacle. Oddly, the pound is not really doing much, which shows you, I mean, I know that cable is higher over the last couple of weeks, but that's because the dollar is weakening. Euro pound is still above 0.9, so 90. So it's been between 90 and 92, or 89 and 92 for the past months. And that tells you, in my opinion, that people actually don't believe anything anymore. It's like, yeah, we're getting a deal. We're going to have to wait and see what happens.
Show me the money.
Yeah, so I think I see a lot of people saying, oh, yeah, the market is now pricing it in. There is a deal, then the pound maybe goes slightly higher. If there isn't, it crashes. I disagree. I think it's going to move either way. So if my humble opinion, if we get a deal, cable goes to 140, euro pound goes to 85. If we don't, then cable goes to 25, 28, 30, whatever. If it goes that low, then I'm going to be looking eventually to buy it. But obviously not at the beginning. But my opinion is either way, we see movement in pound. That's for sure. Okay, payrolls in 15 seconds, and average hourly earnings and Canadian employment. So have you got USD CAD on? You think that's the best one to look at? Santi, yes, the UK government said chance of a deal receding. I just don't listen to anything anymore. Okay, numbers. 245, that's a lot weaker than expected. Average hourly earnings better than expected, but who cares? And Canadian employment, I haven't got the number yet. Do we have it there?
A lot weaker than expected, and the previous one revised down. Unemployment, though, as expected, I assume.
Canadian employment better than expected. So
yeah, Canadian employment triple what was expected, so a huge bit here.
Yeah, participation.
So we had a huge
down.
bit in Canadian, the huge miss in US. So let's have a look at USD CAD.
Yeah.
USD CAD couldn't care less.
Yeah.
Participation rate in the US fell by 0.2, and so unemployment rate fell as well.
Yeah.
By 0.2.
Yeah. US trade balance somewhat better than expected, but still, I mean, it's
trade
horrific.
Balance is a joke.
Yeah, it's horrific. Manufacturing payrolls was almost half of what was expected in the US. Yeah. Canadian trade balance was worse. Canadian unemployment rate fell from 8.9% to 8.5%. So, a big bit there.
Yeah. Oh, this is funny.
So let's see. The cable is higher. The euro is higher. In essence, the dollar seems to be weakening. Here's the USD CAD showing some follow through. So bottom line, so far, this has been US dollar negative. No real surprise there, in my opinion. Anything is going to be dollar negative as long as we don't have something, groundbreaking, because the dollar is in a downtrend anyhow. So, somebody might say, oh, the dollar is weakening because, employment data was worse. Yeah, I mean, it's a valid interpretation. I'm not saying that it goes against economic logic, although the vast majority of things do go against economic logic nowadays. But I think most importantly is that perhaps the dollar, the traders are now, market participants in general are, feeling a lot easier in selling some dollars, because now this event is off, and anyhow, they're following the trend, which is, a lower dollar.
Yes.
Other than that, I don't really see the market. Let's see what the precious metals are doing.
They're fading.
Precious metals actually, they rallied initially. They're fading, and risk obviously rallies. Stocks obviously rallying, no matter what happens with payrolls.
Yes, obviously, yes.
So the metals are actually interesting. They spiked.
Gold is unchanged on the day. Actually, it was higher, it was lower. Now it's more or less unchanged on the day.
Yeah.
Silver is. Sorry, I was looking at the 4-hour chart. What am I talking about? Sorry, I'm usually on the daily chart, so I assume it's. It's gold is actually at the lows of the day. Not that it's like a lot negative. It's like minus, but it is accelerating, minus 0.3%. So yes, metals are on the defensive, to be honest.
Yes.
Silver, same deal. It was positive. Now it's more or less unchanged on the day. Stocks, as you said, Stelio, they seem to to keep the good bid they in any case have. Crude oil has been fading, but not post the NFPs. It was actually fading long before the NFPs. It was much higher on the day. It has pared back its gains, 2/3 of its gains. It has given it back, although it's very early in the day to say. Keep in mind, we've broken this bull flag, but at the same time, keep in mind that this might be one last push higher temporarily before we have some corrective move. I mean, here's the chart. We did hit a resistance area. But yeah, we do seem to be fading during the past couple of hours.
Yeah.
So Stelio, what else did we have? And we'll keep monitoring of what the market does.
Well, you talked about oil. We had yesterday OPEC Plus, who were discussing about how they're going to go forward with the output cuts. And the main question was that there seemed to be a rift between countries, but they made a compromise, which was seen as a positive by the markets. And they agreed to, I think it was to add 500,000 barrels per day of production. And there's going to be more consultations going forward, I think on a monthly basis, to see how it goes. So basically the end result was that there was an agreement between the member states, and really unity for them is what matters. And even though they're adding more production.
OPEC Plus, by the way, for people that might not know, is OPEC plus Russia, right?
Russia, yeah, and Russia is a big player, obviously, and whenever they all agree.
Do you think that's a move to keep the U.S. shale producers under pressure?
Well, U.S. shale producers are under pressure as long as oil is.
To keep them though.
Yeah, probably, yeah. And you've seen rig counts in the U.S. I mean, it's insane. The average
they've plunged.
Before COVID, the average was something like 800. Baker Hughes, the most important number, and now it's gone down to 200 something. So it is a big deal, and to restart them, it's not I'll flip the switch and tomorrow we're going.
Yeah. It's not that they're going to restart them the moment they go at break-even price, because
exactly.
Who knows, if it plunges lower again, then yeah.
And it's interesting because the Saudis have been doing this over and over for decades now. Remember when after COVID they came in and they started selling at a much lower price straight away. So remember, from one day to the next. And just killed everything, and they do this, and they can afford to do this. That's
they can afford to do it, yes, because in the long run, it's going to be more financially beneficial for them to kick out an industry and a competitive industry out of the market. Yes, absolutely.
Of course. So that's giving a nice little push to oil. But
although I should have probably said uncompetitive, because because the problem is that as always, it was a nice marketing scheme from politicians, but to be honest, unfortunately, the shale industry in the US is unfortunately really uncompetitive, and that's a big problem.
Well, they have to. Yeah,
they have huge piles of debt. They have high break-evens.
Yes.
Yeah.
I think that the debt that they have, the leverage that they have, is the biggest hurdle for them. But anyway, when oil was above
debt
70,
is not the solution for everything.
It is. So
who would have known?
When oil price was above $70-$80, I mean, they were making money and they were extracting as much as they could. New technologies, fracking, everything they could to get it out. But now it's obviously a different story. So that's about oil. We seem to have, again, no news, but we seem to be getting closer in the US for the stimulus package, which is going to be under $1 trillion, apparently. Well, that's the proposal, at least. So we've gone down from $2 trillion to under $1. But
that's a bridge. That's a bridge.
It's the amuse-bouche, as they say in restaurants.
It's in essence a bridge deal, to get it going, through whatever is needed, like March, I'm assuming somewhere there, they will be able to put something in place.
Yeah, exactly. As long as the transition of power goes smoothly, Biden is in, and then they'll come out with something. Elsewhere, we talked about metals a little bit.
By the way, metals are turning again. They've pared back their losses.
Gold
was at minus 0.3 and was accelerating lower, and it's now actually slightly positive on the day. So metals traders reconsidered, thought that there's nothing negative metals about the news.
Yeah, I don't know. I'm a bit wary about metals. I was long. I got long silver. I got out obviously a little bit early. I got out in the kind of low 23s. But I don't know. I still feel a little bit strange.
Look at platinum, though, Stelio. Look at platinum. We've been warning about it.
Platinum, I want to ask you, because a good friend of mine was asking me, Oh, what do you think? What do you think? I said, look, technically it's breaking out.
Oh yeah,
But
it is.
look at DSI, look at positioning, look at the dollar. The dollar is really, I mean, it's really weak, and it's oversold, and platinum is overbought and really bullish. I just said, I think you should
Yeah,
be
but
bullish.
look
But we
at the
don't.
relative. Look
Yeah,
at the relative overperformance. Even when gold and silver were moving lower, platinum couldn't have cared less.
yeah,
And
true,
that's also important to notice.
Yeah, but I just feel like you're chasing it up here now. That's the thing. But
Look at this, Telio.
Hey guys, my internet
This is
connection went down for a little while.
Okay.
Did you know I was gone?
We didn't realize. Sorry.
No, we didn't.
You didn't even miss me. Oh boy.
Still, look at this. Look
Yeah.
at this textbook trade here. This is the gold platinum ratio. And what I mean about textbook trade, look at this. We had this sharp leg lower, and then look at this corrective, right? Consolidation, and look at the impulsive move lower we're getting now, huh?
Yeah. But the question
And
is,
a lot of people are looking at this and they're like, oh, it's done. I mean, whatever it has done, it had to do, it has mostly already done. And then you zoom out in the chart and realize that nope, no, actually it has a long way more to go if it wants to, right?
Yeah. Anyway, platinum is a strange one. I haven't traded it, but yeah, a friend of mine was asking. What else? We talked about the pound. The euro is kind of, apart from euro dollar going higher, it's not doing that much. We haven't had anything major in terms of numbers. We got UK PMIs, construction PMI, a lot better than expected. So, in line with the same rhetoric of the last few weeks, that things are going back towards normality. We're not even close, but towards normality. And as long as nothing major happens in the global economy, then we could say we're on the right path. Yeah.
Let's see.
Look
at yesterday's candlestick in palladium. At some point it was getting really destroyed.
Wow,
then it
that
pulled
wick
back.
Is huge.
Yeah. But we're still trapped in this consolidation. I'm mentioning it since we were talking about metals and since somebody asked about it as well. But on the other hand, look at copper. Copper is just, grinding higher, right? I mean,
yeah.
Unstoppable.
Scroll out a little bit so that I can see like the long-term chart where it is. Yeah, okay.
Yeah, I mean, look at this, that double bottom, right?
Yeah, that was.
I mean, this double bottom breaking through there. I know that people are going to think this is excessive, but I don't believe so.
That's the amount it's going to go up by. So basically,
the target is
4.5, 4.5.
What is it? 4.7?
Yeah.
I think we're going there. I think we are. Not in a straight line, but I think we are going there.
Indeed. Wow. Okay, we're gonna have a look at a few crosses and a few questions. Somebody's asking the ruble. That's a volatile. Absolutely. That's a volatile one. If you ever saw one.
There it goes. Ruble, is moving lower. Still not very impressive, but who knows? It might actually end up accelerating. I'm very positive, fundamentally speaking, the ruble, especially against the dollar. I mean, there is no comparison. Fiscally speaking, there's no comparison between the two economies. The Russian economy is 100 times better, the least to say, fiscally speaking. So, and if crude oil remains rather well bid, that's another tailwind for the Russian ruble.
Agreed. Yes.
Next downside target roughly at 72.30.
But really, the big one is that low at 68. What was it? That just above that zone. Basically, that zone you have there at 67, 68. That's pretty massive.
Yeah. And
anyway, yeah.
Yeah, I mean, and at some point, I really believe that the ruble Stelio can go back to 35. I know that some people might think this is crazy, but I think it will, actually.
Yeah, well, it's a
Will
volatile
take
one.
years, of course, right?
I've never traded the ruble.
Yeah. Let me see, what else do we have as questions? We have Ben Maldonado, you said, Blake said today. Is that right, Dale? Did we lose Dale again?
I don't know, but he did say we have Ben Maldonado, who I really like.
Yeah, indeed. Okay, so let's have a look at a few more instruments. So, very briefly, S&P, and I say very briefly because really nothing has changed. I mentioned before 3692, the 127% extension of this triangle. So the first area of resistance. Listen, when you're at all-time highs, there are no areas of resistance with the exception of extensions, right? Fib extensions. There is no previous price at current levels, so we can look at supply demand zones, right? So unfortunately, when you're in an uptrend and you're at prices you've never seen before, or in a downtrend and in prices you've never seen before, your information about potential resistance levels is a lot weaker. So you have to keep that in mind, because always the most reliable zones for an instrument to find resistance or an instrument to find support are previous. It's like, the market has memory, right? So previous areas that there were supply demand zones, so there were like, there was a stall in price or they retested multiple times, are quite reliable. So now that we're at all-time highs, we don't have that. So what's the only thing we have? Fib extensions. So, take that with a pinch of salt. That's why I'm, doing all this explanation. Take that with a pinch of salt. And, the only type of extensions we have to check out here is the most recent one, the triangles range, which, there are the extensions we were talking about. And let's also take the bigger one, which is the COVID move lower. So let's also take that one. Let's remove the retracements and leave only the extensions. Okay, so 3692. Then we have the 127% extension of the COVID move lower that comes at 3727. So these are the next two areas of upside resistance, let's call it. Obviously, there is zero reason why you should be looking to fade this. Yeah, at some point it's going to pull back, but waking up every day, crossing your fingers and hoping that that's the day without having any type of evidence, won't do any well to your trading account. So keep that in mind. Having to do with the Nasdaq at all-time highs as well. Next upside resistance almost at 13,000, the triangles extension, right? So more or less, as you see, the same type of formation we had with the S&P. Here's the IWM. It has been overperforming. Next upside target, the 127% extension of the COVID plans lower at almost at 191. So as you see, some look a little bit better, some look a little bit worse, but no real bearish technical scenario playing out yet on any of the indices. Somebody will notice that there is a little bit of a divergence on the VIX, but it's like, just barely noticeable. So that on its own is no signal whatsoever. I mean, having just a barely noticeable divergence doesn't say much. It can persist for quite some time before it actually plays out. So keep that in mind. Now, having to do with the DAX, DAX consolidating just below the previous high, but in all actuality, this looks rather, bullish as well. I mean, I don't really have something on the chart to pinpoint to that, looks like a reversal formation, not yet at least. And, let's see how we close the week, but so far everything seems to be on the up and up. Keep in mind many of you might not have noticed, but some might be relevant statistics. For example, the month of November was like the second best November in history for the Dow, if I'm not mistaken. And the best one, like following 87 or something like that, or 28, or the third one following 28 and 87, something like that. So keep that in mind. The best month, not the best November, actually. So, everything is well bid. There's no question about it. Economic news. We answered these questions. Small cap Russell 2000. We just had a look at it. The IWM. Yeah. By support yields. What about the yields? Yes, the yields are actually rebounding once again today, but I've said that before. Just look at the way yields are rebounding. There's nothing impulsive with it, right? Yes, we are off the lows. There's no question about it. But, the manner we're rebounding, is nothing bullish, nothing to write home about. So, you have to keep that in mind. So yeah, we can keep moving higher in this slow, unimpressive manner, but keep in mind that this is a highly regulated market. So that's that. Dollar is trying to rebound slightly. So everything against the dollar is off the highs of the day. But so far, this looks more like noise to me. If you're really looking to fade, if for some reason you're prematurely looking to fade the dollar weakness, and the equity strength, if there is one thing that looks interesting to me, and I've showed it the previous days as well, is the Kiwi, specifically this ascending wedge on the 4-hour chart, which just a few minutes ago we started breaking through, right? So if we assume that the dollar manages to put on a rally, which it's extremely early and no real evidence yet, but just a working theory, right? If we assume that the dollar tries to reverse higher as risk tries to reverse lower for some reason, Kiwi looks interesting. Assuming that this ascending wedge plays out, theoretically speaking, we should see a full retracement of it, which means a move back to 68 cents. So that would imply another 230 pips of downside to fulfill the target of such an ascending wedge. So, keep that in mind. Speaking of which, Aussie yen and Kiwi yen don't really yet confirm. Yes, they're definitely off the highs, but it's not just now. They started pulling back a couple of days ago, but nothing to write home about. I'm saying that because traditionally speaking, Aussie yen and Kiwi yen were more sensitive risk, but that was the case at the times that USD yen was actually tracking risk very, very closely, which has stopped being the case since they, in essence, broke the bond market, right? So since they broke the treasury market, because in essence, it's not fully owned by the Fed, but anything that's fresh issued is almost fully owned by the Fed. So the Fed still has like a minority stake at this market, something like, I might be mistaking here, like 25%, I think, like 20%, 30%, so somewhere in between there. But what is worth paying attention to is that almost anything that has been issued during the past many months has been totally absorbed by the Fed. So, not the only player on the market, but probably almost the only player on the market with whatever has to do with primary issuance, right? So, that definitely, is important. Somebody's asking about natural gas. Yes, we didn't mention actually that. So here's natural gas. No, actually, let's go on the daily first. So here's natural gas. As I said yesterday, perhaps trying to play the bigger channel, right? So I'm monitoring this. Hey, Dale,
Hey.
still alive? What happened?
I'm here. Natural gas, buddy.
Are we talking about this one? Where's your support?
I have Febreze, Airspray.
So testing the 50% fib, by the way, here in natural gas from the lows to the high at 245. But an interesting confluence of supports might be closer to 225, 61.8% fib, another horizontal support area, and this channel's support. My bias hasn't changed, meaning I think that there is a very, very high probability that that double bottom, triple bottom down there at 150 is the low. So I don't think we're going back there or lower. I think the chances are extremely low. I would probably be looking for a higher low to be put in place here, meaning, you know, we had the low there, right? Let me remove the magnet. So we had a low here. A higher low there. I think it's very likely that we're going to put another higher low in place. Okay, that's what I think about natural gas. USD CAD fib short to 126.54 is Raul is asking. Listen, I was warning that USD CAD was going to new lows long time ago because the formation was, you know, clearly corrective, right? I mean, when I saw this lower high, we didn't even manage to produce a higher high, like at least an ABC type of move. I mean, I thought that, you know, this is a dead market. I think next downside support is roughly at 127.50. As I said, charts have memory, right? Price has memory. So as you see, 127.50 has been support resistance multiple times in the past. At 127.30, we also have the 161.8% extension of this rebound higher. So, you know, I think before we get to where you're looking for, that's the next downside target. After that, I would be looking for that low over there to be tested, 125.50, so on and so forth. But, you know, next target, as I said, 127.50. Listen, at some point, we're going to get a big rebound in all these pairs, right? You know, I'm very bearish the dollar, and I've been very bearish the dollar for, you know, a long time, you know, for all the right reasons, I think. But, you know, I have to say here that if you have not been short the dollar, I have been short the dollar, for example, for a long time in USD NOK. But if you haven't ridden this trend lower in the dollar, you know, probably, I'm not saying that it can't go lower. It will definitely eventually do. But in the short to medium term, you know, the risk reward is really bad down here. I'm not saying that it can't go lower. It can even accelerate lower. I mean, you know, if I was long the dollar at any shape or form, I wouldn't be sleeping good at night. I can tell you that much, because if we get any surprise type of like big prolonged move, it's going to be to the downside, in my opinion. But at some point, there will have to be some type of a pullback in equities, and probably that's going to be the time that we're going to see a squeeze in the dollar. You know, there's going to be a lot of people that will be jumping short the dollar at the wrong time, as it always happens, especially the retail crowd tends to be jumping on trends at a very, you know, they spend a lot of time. Yeah, they spend a lot of time trying to fight a trend when it's actually unfolding, and they get burned again and again and again. And when they capitulate and they're like, oh, you know, just, you know, F it. You know, I'm going to sell dollars. You know, I lost money so many times trying to, for example, sell the Euro USD. You know, I'm bored. I'm sick. I think it's going much higher. I'm going to buy it. And then it's when you get a pullback. So, you don't want to be that guy, right? Or that girl.
Have you ever been?
Oh, absolutely. But it's been,
Okay.
thankfully,
That's how you know. Anyway,
yeah,
that's how you know.
thankfully, it's been many, many years ago.
Yeah.
I learned that lesson, I think, quite fast.
Good. But guys, when we talk about these things, these psychological things, and I've talked about it. There are times the market will wear me out. I normally don't reverse, but then I'll kind of just let it go, and then it goes. So Mr. Market's a very mean guy. He tries to shake out as many participants as possible before the move they're looking for occurs, and then most likely without them.
Yeah, and if you're looking to get rid of these bad habits, you have to start by pinpointing the fundamental, the basic instinct that triggers them. And for example, the basic instinct that triggers that kind of a behavior is either FOMO, fear of missing out, or the opposite, which I think is even more destructive, which is what? The anxiety that there is a big move happening and you're not benefiting from that. And it makes you almost feel like you're losing money, right? You're not losing money, you have no position.
Right.
Yeah, but it makes you feel stupid, like, oh my God. And, and of course, as always, you're going to go to social media, and on Twitter, you're going to read that, almost everybody was making money from that move, which is, of course, a lie. Bullshit. Yes, exactly. But almost everybody's going to claim that, you see that move, I rode it all the way. I made, tons and tons of money. I'm about to go to the Lamborghini car sales. And
it's interview time, but do you know what it means when people on Twitter say, I hope you caught it?
That they didn't.
That they know you didn't.
Yeah, and probably they didn't either.
And they're glad they did, and you didn't, and they're glad about it.
Yeah, if they did, because some of them don't even trade real money. So
All right, let's bring Mr. Ben. Geometry in. Okay, Mr. Cycles and Geometry. Steve, great job this week. And I mean, what a great job with the website of having live charts right on the site. There are times I think, well, there's nothing else that Steve
we'll always find more stuff.
The site, and then there's always, another surprise. You're like Santa Claus of the FX world. What do you think? Saint
Listen,
Nick. He was Greek, wasn't he? Nicholas, Saint Nick.
Yeah, we have a Saint Nick now. I don't know which one you're referring to, because as you know, I'm not following
Nicholas Gregorios.
I'm not following religion closely.
Well, that's not religion. That's just
but in any case,
who gives presents to everyone.
Yeah, but in any case, I have to tell you that having to do with being Santa Claus, I'm actively working on the belly. I just, I'm halfway in beard color, half white. So, I'm putting my best efforts there.
All right, man. I can't wait to see a picture of you in the outfit and what Jason. and look at these squares and circles. It's got to be Ben Maldonado.
It is.
Hey, Ben. Indeed. Can't hear you yet, bro.
Yes, you're still muted, Ben. Just unmute yourself.
There I am.
There you go. Now you're unmuted, Ben.
Thank you, Steve. Ben. Hey, Dale, how you doing?
Good, buddy. Welcome back. So, glad that your presentation stayed whole.
And, I had to rebuild it, but it's nice. It's
wow. Good. Okay,
it got better. How about that?
I believe that. So I'm just going to let you go and talk about what you're seeing going into your end. I noticed one of the tweets is you think that a lot of the weak gold longs were finally shaken out, and that the lows are in.
Yeah, and it's going to be the theme of the presentation, which is, the markets and Steve referred to this. Steve is great. The last few times I've come on, he's sort of touched on items I'm going to talk about and previewed the subject. So he's a perfect setup, man.
Yeah.
But one of the things we're going to talk about is that, the markets always set up the crowd to get hurt. The crowd is right in the middle of a move. The crowd is wrong at the extremes. And so you can't just be a wild, sort of reckless contrarian, which I was early in my career, and I paid the price and I paid my tuition to the market gods and learned it only works. Being a contrarian only works at either end of a move, right? Either at the beginning or when the move is near the end. It doesn't work in the middle, and that's when you get run over. So I'm seeing that in a lot of markets, important markets, stocks, bonds, currencies, the metals, and we'll go over the charts, and we'll look at some of the issues, in addition to looking at some of the situations they're in addition to a quick review of the cycles and what's going on with the cycles, because we want to always be aware of the background weather. First, I'm a big proponent of personal responsibility and accountability. It's part of the reason why I post a lot of stuff on Twitter. Is I want to be accountable, right? I want to have to answer to what I think, what I believe, and what I'm saying. And so in January, when I was on your show and we were talking about sort of major trends and things to look for in 2020, these are the three that I highlighted: volatility, commodities, and inflation/stagflation. Two of the three have hit so far, and I think hit pretty well. We've seen unprecedented volatility early in the year. We may get a bout of it here in December again. Commodities have come to life, and I think that's a trend where we're in the first couple innings of that game. If you're looking at a baseball analogy, there's much more to go, and we'll look at the charts and see that. The inflation stagflation one is still sort of a question mark. I firmly believe that inflation is here, and anybody who goes to the grocery store feels it and sees it. It's going to work its way through the rest of the economy, but I think this stagflation inflation theme is going to hit pretty big in the coming year. We talked a few like in June, I think in the June talk, we discussed this epic cycle that is sort of the background weather that we're operating in. This is a huge cycle. I mean, it goes back over 400 years. And it's the tenets of this cycle and the things to understand about this cycle. The cycle is all about development of these large centralized institutions and organizations that we use to govern society, to get things done, to produce the materials and the products needed. It's all about creating big organizations and big structures that we've relied on for years and years and years. What's currently happening is we're in a phase where there's a loss of faith and trust in these sorts of institutions, and we're seeing the fragmentation of them right now. What we're going to experience and continue to experience over the next 5-6 years as we end this part of this cycle is a transition into more decentralized systems and individual responsibilities. So we're not going to be relying on these large, massive organizations anymore. We're going to be more self-reliant and more sort of tribal in a smaller way. What I've put on this slide is examples that we see of failing, and I have that in quotes because they're not out of business or not completely defunct, but they're beginning to fail. And the most important thing is the confidence that people have in them is failing. We've seen it you can go through the list and you can see examples of it. The most recent ones that I have question marks next to, when I brought this up in June, we talked about the Federal Reserve, how everybody said, the Fed is God. Whatever the Fed does, you got to follow the Fed. You can't fight the Fed. It's the Fed. It's the Fed. It's the Fed.
They still believe that, Ben.
They still believe it, and it's still true to a certain extent. But what we're starting to see in the articles, you're starting to see stories, you're starting to see questions, you're starting to see at the press conferences, you're starting to see people questioning, what can they do now? What power do they have left? And of course, Powell is, insisting, oh, we have plenty of tools at our disposal. There's plenty of things that we can do. He's saying that while talking out of one side of his mouth, while the other side of his mouth, he's saying, oh, Congress has to pass fiscal stimulus. We must have fiscal stimulus. Well, I think he's beginning to, lose his poker face and showing that maybe they are at the end of their rope in terms of what they can do.
Mm-hmm. Yeah, but the population will lose faith when there's a decline in the market that the Fed can't stop.
Very true. That's going to be the ultimate end of the Fed. The last one I have is disturbing for many people, but it's something we have to look at. Is this experience that we've just gone through, is this the death blow of people's faith in elections and faith in representative democracy? I certainly hope not. But this is, without making any political statements, because I don't want to get political, whatever happens, whatever the end result of this election is, half the country's going to believe it was stolen from them.
Yeah.
And that's a tough situation set up for the markets, set up for the next administration, a tough setup economically moving forward. So we have to keep those things in mind. The reason I'm bringing it up again is not about politics. It's about in conjunction with this major 400-year cycle that we're looking at. It fits perfectly. And when you know that we're in this kind of cycle, you filter sort of the news and you filter events looking to see, that's why this is happening. I see it fits with what's going on.
Yeah, this was much worse than Nixon to bring about people's distrust of the system.
No question. No question.
By, in magnitude, kind of like, maybe feeling a 2.0 quake and then having a 9.0 is what we've just gone through.
Yep. And I think,
thank you, President Trump.
I think it has everything.
I'm not going to get political. Thank you. Thank you very much, President Trump.
And I think the reason it's more intense and more damaging is where we are in the cycle, right? That Nixon was 40 years ago, 50 years ago.
Yeah.
Now we're near the end. So that's why it happens. Another cycle that we've talked about on your show for a couple of years now is this connection to the 70s that we're currently experiencing. All the ones with check marks we've already discussed, and they've come up and they've sort of been proven out. The ones below are ones that are yet to play out, but I think where we can see the path to them coming true. The New York City fiscal crisis in the late 70s. With the exodus of people out of the city, especially people who are supporting the tax base, no doubt New York City is going to see a financial crisis in the next year or so. The stagflation we've talked about. The latest one I put up, which I thought was really interesting, and the connection dawned on me when I saw what was happening with Nixon and then Carter. Joe Biden is the cycle version, the 70s cycle version of Jimmy Carter. He's a Democrat who's coming in after a president who created issues, was highly unpopular. And I hope it's not going to work out the same economically, but the cycle is set up that way. That
different party though.
Jimmy Carter was a Democrat.
Oh, that's right. Yeah,
Jimmy was a Democrat. Right. So it's rhyming, right?
It is rhyming.
Yeah, it may not play out exactly the same, but the setup is there, and I think it's something to watch and to see how it goes.
You're bumming me out.
Well, it's being aware means we can be prepared, right? We can get ourselves positioned to where we don't get hurt, and we can possibly benefit from it, and that's what I'm trying to look at.
Okay.
This is the cycle. This is the S&P from 71 to 75. I'm showing where we are in the cycle, which is, you can see by the arrow where we are. The X here, it's a little faded, but it's a little too dark. But this is where the analog actually stopped following. We were following it perfectly up until then, currently, and we stopped following there. The reason I show this is just to let people know and let you all know that the cycle's still running. Does that mean we're going to have a collapse in the markets? Absolutely not. Does that mean it's possible? Yeah. And the next section of this presentation that we're going to talk about, I think, is really important. And Steve referred to it today in your all's part of the show about risk versus reward. I think we are at a very important point in many markets where risk versus reward needs to be carefully examined and calculated. And the thing that struck me and why I wanted this to be the main topic of the presentation is it all goes back to what's the role of us as a trader? What are we supposed to do as traders? A lot of people, especially new people, myself included, when I started, I thought you had to be, the person who could predict the future, right? Predict the markets, where's it going, and get yourself positioned. And, it was all about the ego and my ego at that time. I don't think I've come around to the view that sets you up for failure. It sets you up to not be able to change your mind. It sets you up to not be able to listen to the markets, and essentially sets you up for failure as a trader. What I've come around to and believe that is a healthier way, both psychologically and financially, to trade is look for markets where there's a mispricing of risk, where things aren't being factored in, where your risk reward is in your favor, where you can create probabilities where you don't have to be right 100% of the time to make money. You only have to be right a fraction of the time if the risk reward is in your favor and you let profits run. So what we're going to do is we're going to look at some examples of markets where I think there's a mispricing of risk. We're going to look at the most crowded trades. And right now, the most crowded trades are long stocks, short the dollar, short bonds, and it was long gold. And I'll show you, because gold is a perfect example what I think can happen in those other three markets and many markets that are sort of where the risk reward ratio is out of balance.
Okay.
The key thing to understand about this is long term, I believe stocks are going much higher. I believe the dollar's going much lower, and I believe bonds are going much lower. But you have to look at trading is about timing. And right now, those markets are set up to hurt a lot of people who are in a crowded trade. And that's what I want to go over in the charts and look at some of the geometry and some of the sort of the background. In the intro, I put a slide in there, and I talk about this on Twitter a lot. In the markets, you have to think like a criminal, right? And this because the things are counterintuitive, right? You get a report saying, oh, the economy shrank this past quarter and the market skyrockets. And you say, well, how does that happen? How can that happen? Well, because everybody most likely was already in position expecting the bad news. The bad news comes out, the institutions and the big money that can move the market use that as the opportunity to jam it the other way. So you got to think like a criminal and think, how are these guys going to hurt the most people, and make sure that you're not exposed to that side of the trade. First thing I want to talk about is gold, because gold is an example where we had very strong positioning on one side of the market, and the market did the opposite. Real rates in gold. This is from the 70s, and I put this chart in to show that when this setups occurred, you have a powerful move in gold. So the fundamentals for gold currently are in line with the fundamentals of gold in the 1970s. Gold versus the money supply. Again, look back at the 70s. We're heading this way, right? Money supply is up tremendously. The gold price needs to rise as well. So this is the setup. This is the fundamental setup. The problem with gold was we were so heavily weighted in precious metals, and sentiment was so strongly bullish that it created a negative, sort of a negative setup, a setup for failure. And you saw what happened when sentiment's high and the gold price is high. Gold came off. A couple days ago, we had a nice reversal in gold. I posted something about that, about adding to positions, because a lot of that sentiment has been washed out, and the risk reward obviously is much better at, you know, gold at 1750, 1800 than it was at 2100. And look at how the flows have changed on gold recently. Strong money going in into the highs. We get this correction and the money's coming out of gold.
Yeah,
Now,
I heard that was one of the biggest outflows in I don't know how many years.
well, if you look at this chart,
Record.
it's at least 15 years.
Yeah, okay.
So
That wasn't far away from the reaction we got.
no, and this is the
within
idea
weeks. Yeah.
of right. If the boat's too crowded on one side, you got to be careful, because the chances are they're going to tip it, and they tipped it. They took it from 2100 down to 1750. But the fundamentals for gold look good long term, very good. Let's look at the geometry. Let's look at the technicals.
And I will acknowledge that when I first started interviewing Ben, there was a weekly breakout that he said he was going to get long on. I think it was 1360 or 80.
Yep.
And it never looked back.
Yeah, it was a good level and a good breakout on the geometry.
Yeah.
So here you see the daily gold with my geometry on it. I show the ABC down. We could possibly make a move down to this level. You know, if we fail and roll over and take out this low, there's very strong support here in this 1750 area. Let me see, where's the exact number there? Yeah, right around 1759. Maybe they overthrow, really push it, take it down, complete the ABC. But I'm very bullish on gold now. We either have seen a low or we're close to the low. I added to positions here because of the support we got on the geometry, the washed out all the late longs. Everybody who got long up here is gone. They're done.
Okay, so if we have one more jiggle to the downside, do you get out of the way and then see what happens if we take out this low that we?
I'm trying to trade this for the big move, which I think is we're going to go to new highs here. So I bought some more at the lows here. I'm staying with it, and I'll add to the positions if we come into those support areas that I see, that you see on the chart.
Okay, so it's kind of a scale then.
Yep. Yeah.
Okay.
Here's the monthly on gold. Again, it's another look of how we accelerated up on the circle. We got stopped by the geometry here. We found support on the geometry here. Another reason why this is a good area to add. And this is monthly. So this is not a 5-minute chart or anything. This is big picture. I mean, gold can, I think if it does what we think it's going to do based on the pattern, you're looking in upper 2s, 3,000, potentially 4,000 possibly.
Okay.
So big move coming here. Silver's one I like to show because earlier in the year when I was showing these charts, if you look at the chart of silver, remember this chart in the formation, almost all of the commodities that I follow have a similar pattern where we've got multi-year base, 5, 6, 7, sometimes 10-year base, and then they're beginning to break out. You saw the breakout in silver, got stopped by the geometry here at the high. Now we pull back into the geometric support. So anywhere in this 21, 22 area, silver's a good buy. Again, looking for new highs, certainly going to eclipse this high at some point in this cycle if the commodities do what we think they're going to do. So silver, very bullish. Okay, Dale, here's your morning quiz. I know it's Friday and everybody's a little burnt out and tired. What do you think this chart shows?
The the megaphone and the S&Ps?
One is the S&P. What's the purple?
The purple is money supply.
Close. Fed balance sheet.
Okay.
So
all right.
basically right now, since the COVID hit, the trade in the S&P is a trade on the Fed balance sheet. As long as the balance sheet is rising, the market will rise. When the balance sheet flattens out, we get sort of choppiness or corrections. So you're betting on the Fed when you're betting on the S&P right now, and it's a good bet. It's been working. It keeps working until it doesn't. But let's again look at the risk reward. Financial conditions right now are about as good as they get. We're at below the conditions. Any of the financial conditions are as good as they've gotten since the mid 90s. You can see what happens as we have these perfect conditions. A lot of times you get a correction. Doesn't mean we're absolutely going to get a correction. It just means, again, the odds favor that to happen. Percent of stocks above their 200-day moving average. Again, just another marker saying where are we in this move? Where are we? Is it late in the game? Is it early in the game? This is telling you we're late in the game when you're looking at the S&P. Sentiment, short interest, new lows in short interest. Short interest is actually well below the levels it was going into the last financial crisis. There is no interest in shorting. Does it mean the market's going to go down right away? No. Does it mean the risk of the market going down is a lot higher? Yes. Fear and greed index. This is the CNN index. I just put it in here it's a shorter term thing, but again, it shows you where are we in the cycle. The whole move up, we were in this red zone from the lows in March through the summer. We were in this red zone. Now again, the risk reward is not favorable for longs. Investor intelligence bulls. Look where we were in the lows. Look where we were all the way up over the summer. Look where we are now. Again, it's a time to look at it and say, okay, if I've got long positions, what's my exit strategy? How much am I willing to risk? How much am I going to give back? What am I going to do? Here's the percent looking for corrections, again, below the levels of the 2008, 2009 crisis. So sentiment's pretty bullish. Call options.
Wow.
Astounding, huh?
Yeah.
That was the day before Thanksgiving. Record. Yeah. Beyond anything we've seen since the go-go 90s into the dot-com bubble. But it's been a winner. You got to say the people that have been playing it have been winning. Here's a 5-day moving average of the put-call ratio, CBOE put-call ratio. Again, does it mean the market's going to crash tomorrow? Absolutely not. Does it mean your risk reward is not tilted in your favor if you're initiating longs today? Yeah, that's what it's telling you. Or you better keep it on a short leash. Day trade, couple day trade, keep it tight if you're going to be long. And I've been trading the long side as well on the ES, but on a daily basis, because you got to go with where the action is and where the flow is. Insider transactions, again, another record. They're selling. Yeah. Are they great at timing? No, but they just tell you where they think value is.
Okay.
Here's an interesting chart too. This is S&P in dollars, S&P in euros. So this gets to the point of if the dollar stops being weak, the market's going to stop going up. So if you're betting on long equities, you're betting on a weak dollar right now. Yeah. Because in euro terms, we didn't even take out the previous high and the January, February highs of earlier this year. We're still below those.
Yeah, interesting.
Mm-hmm. So now let's get to the charts. Let's look at the chart evidence. What are the charts telling us? Well, the chart on a monthly basis is bullish. We closed over this important geometric support resistance, which we were having a lot of trouble with earlier in the year. It's basically the 3370, 3380 area. We closed above that. So right now, shorter term, it's bullish. This line up here is around 3706. I think that's a reasonable target. We've got geometry there that could probably stop this. If things turn down, the geometry here and geometry here and geometry here are possible landing points. 3030 is an area where we could hit. If things get super ugly for whatever reason, the bottom of this megaphone is around 2020, which would be new lows.
Okay.
Here's one a little shorter term on the daily. I know Dale likes these timing charts. These are simply calendar days from different highs and lows. And they're important. They're sort of Ganniversaries, as they're called. We're coming up on a bunch of them. We're actually in areas where they're going to be. December 2nd was one. December 10th is another one. December 16th, December 23rd. So there's clusters of them coming in off of different highs and lows, off of this, off of the move from the low in March.
Mm-hmm.
We also have important timing, which is 360 days, the anniversary of that low. So it's coming up in March. So what am I saying here is in March, we're either going to have a very, very important high or a very important low. Do we run from here to March? Well, wouldn't that be the repeat of 99? Remember 99? How
Yeah. Mm-hmm.
year end we ran up into from 99 into 2000?
Yeah, it was March. Yeah.
So it's possible we go up there. It's also possible we could top here and head down. That's where we have to rely on the technicals and see when the charts tell us it's time to go. This is an interesting chart because I've been looking at the VIX, seeing what clues we could get from that. And this is VIX futures. And what I've noticed that the important line is 24 in the VIX futures, and that corresponds with this geometric line here. Every time we've tried to get above 24 and have been able to hold under it, the market's in a favorable position to rally. And whenever we get stuck above it, the market's vulnerable to big moves to the downside. Right now, we're dancing around the line. So this is very important to watch because it'll be a clue. If we can get under this thing and stay below it, then the melt up is going to really be on. If we can't escape this 24 area on the VIX futures and we can stay above it, you got to keep an eye on the exit and 1 foot out the door because that black swan event is much higher probability when the VIX is above that, the futures are above 24. The dollar, we talked about the dollar, how it's all about the dollar. My concern with everybody betting on long stocks and short dollar is the positioning in the US dollar right now. Everybody and their dog is short the dollar. And the market generally likes to punish one-sided positioning. So I don't know what's going to cause it. I don't know how it's going to happen. We'll look at a few charts and see, well, where we can get clues as to when it might be happening. But there's going to be some sort of dollar squeeze to hurt all of these people before the actual big move happens in the dollar. And if you ever day trade or watch a super short-term chart, you can see them do it on a much lower time frame. Right before a big move happens, they run it the opposite way, clean out some stops, and then then the big move happens in the opposite direction. I think that type of thing's coming in the dollar. Again, I don't know what the catalyst is going to be. I don't know the excuse or why or when, but it's coming. Probabilities favor it anyway. Here's again a look at the dollar and asset managers' positionings in the dollar in terms of short. Look at how short this market is.
Yeah.
It's pretty heavy on one side of the boat.
Yeah. Yeah.
So let's look at the dollar. Let's look at the Dixie first. Let's look at this chart. We broke an important trend line. A lot of people jumped on that and we saw some acceleration down. What I think is going to happen in terms of probabilities is we're going to find a low in here. There's going to be an excuse to squeeze the shorts, and they may pop this thing up to the 94, 95 area.
Okay.
And that's where the geometric support and resistance, if they can continue to break it, and if they just keep pushing, 87.70 is the support down here. That's the next support on the monthly.
Yeah.
And that's the highs from 08, 09
Right.
area. So that's what we would be looking at in the dollar. Here's the euro. Euro broke out of this trend line. It's still dancing. It was dancing with this for 4 months. It was dancing with this important geometric support resistance. We're currently above it. The area where it's important is this 119.73 to 119.55. So if we pull back and can stay on top of that area, we got room to run much, much higher in the euro. If we get stuck back below it, you'll see a pretty strong dollar rally, and the euro will go down pretty hard. Aussie. Aussie's in a little different position. We're still below a trend line, a major long-term trend line, although we are above geometric support resistance. The key number there is the 72.70, 72.80 area. As long as we're above that, it's bullish on the Aussie. If they get back below that, that will be your dollar squeeze. So the dollar holds the key to the stock market and everything else. Watch the dollar, know where the dollar's going, know what the dollar's doing. Let's go to rates. I saw this survey and I thought this was really interesting. Only 8% of market participants in the fixed income survey that JP Morgan did are looking for lower 10-year yields in the next year. 8%. That means 92% are looking for higher rates. That's pretty one-sided.
Yeah.
How about some risk reward? Yield curve expectations, all-time highs. Everybody's looking for a steepening curve, looking for higher rates.
Yeah.
The market generally likes to punish that. Let's look at the bonds. So here's the 10-year, big move up. The circle was able to catch the slope and the geometry there. Right now, we've just basically been going sideways. You know, no big moves either way, I think, in the 10-year, because this is where the Fed is acting. But I don't see a strong move lower right now in the 10-year. Could we see it go up and touch the old highs? I think so. In conjunction with dollar strengthening, I think we could see that, and market weakness. The 30 is where I'm actually in play. I've got some long-term options, call options on the 30-year, because we came right down, tapped geometric support resistance here, important support. Rates have been moving up, but I think the setup is there again based on sentiment and the technicals here. Yeah. You got one-sided settlement, you're at support, you buy it. And that's what I did. And let's see how it plays out. If it doesn't work out, I know where I got to cut. We break this line, I'm out. But I think we're looking for lower yields, higher prices in the 30-year treasury.
Nice look.
Commodities. We talked about commodities in the beginning of the year. How's the risk reward set up for commodities? I think it looks the opposite of the stock market right now. Right? Look at the commodities to GDP ratio. Look what happened in the 70s. Could we have a repeat of that? Sure. Are the cycles set up for that? Yes. What if we only get a fraction of that? Could be a hell of a move. So risk reward in commodities looks good. Some people say, oh, the commodities have had a big move. We missed the bottom. Well, look at where we are. Look at the move up so far. It's just taking us back to levels in 2000, the lows.
Embryonic.
Yeah, we're in the beginning of this commodity game. So the risk reward, I think, set up in this market is much more favorable than the other markets we've reviewed. S&P Agricultural Commodity Index.
Yeah,
it's a nice move. This is the first inning, man. This is the beginning. Do I think we're set up for a pullback now? Yes. And we'll look at some of the charts and talk about that. But this is early in the game if you're looking big picture. This is just corn, wheat, and soybeans. Nice move, right? And you'll see it on the charts. Really, really good bases, breaking out of bases. Here's beans, 6-year base on the monthly. Broke through all the downtrend lines. Strong, powerful move up. Very good geometry at the high, not on this monthly, but just in the counts off the lows. So a pullback here or a sideways action to burn off some time, completely expected. I'll be adding to positions and reinitiating positions that I sold into support here. This is a market that is bullish.
Okay.
And your beans in the teens, I think, is coming. Wheat, another market, very similar, almost a 10-year basing pattern with a breakout, consolidating now, could see a pullback or just mark time, another bullish market. And remember that silver chart that we saw?
Yeah, same
in the
base.
beginning? Same base, breakout, same base, breakout. Corn, a little behind the other two, same pattern. Base beginning to break out. Notice how the geometry caught this high too, in addition to the downtrend line. You know, that's not the place to buy. Wait for a little pullback and then buy.
Right.
Coffee, base, breakout. Look at the geometry here. A big battle in coffee right here. Once this is done, should be up and out once that's resolved. But the key again is you're buying off of a big base, as it begins to break out. You're not buying up here.
How much more you have to go, bro?
Got a couple more.
All right.
I'll go fast. Cocoa, same thing. Sugar, same thing. Cotton, same thing. Crude oil. Crude oil is a little different chart, but it does look bullish. Finding support in the right spots, staying on top of it, moving higher. Support on geometry, up. Support on geometry, moving up again. Crude looks good. Copper. Steve was talking about copper. Beautiful chart. Nice base, breakout, buy it on pullbacks. Last thing, one of the things we talked about was inflation and stagflation. Inflation is here, stagflation is coming. Best strategy is to buy real assets. There's your CPI for the 70s. That's going to be repeating. How real assets have done in the 70s. Best performing assets were real assets. Last thing, John Malone, very smart money, chairman of Liberty Media, recently announced moving money into hard assets like housing and commodities, buying hard assets. I want to invest or diversify into hard assets. Commodities were cheap. Smart money knows it. They're doing it. We should too.
Nice presentation.
That's it.
Then that's where you find Ben at Ben Maldonado. Someone said best presentation we've ever had here on Face.
Well, that's saying something.
That is, because there've been a lot of them. But people you are a regular now, Ben. People look forward to you. So thank you, buddy.
I appreciate you, Dale, and I really enjoy the time I spend with you, and I love sharing the information, and hopefully it helps people.
Justin saying, well done, Ben. Amazing, Ben, from Hugo. Galaxy Note says, yes. Great presentation, Ben and Dale. Okay, so thank you, my trading warrior brother. May all your forecasts manifest and you be there to maximize profits.
So be it.
Amen.
Amen.
All right, buddy.
Have a great holiday, Dale.
You too, buddy. I'll be in touch with you. Thank you very much, Ben.
All right, take care.
All right, and we'll see everyone next week. Remember, don't just count your commodities, count your blessings. And I'll see everyone Monday. Adios.